The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And as I said to our predecessor here, Steve Rhodes, do not squeeze the TFNN host. Although I may be squeezably soft, you don't do it. Anyway, we've got a market that's a rocking and a rolling, and a little bit of country, a little bit of rock and roll. Up 11 points in the S&P cash, but that's not the real story. The real story was that it was up 26 points. And now pretty much about half of that, a little over 2 billion shares on the New York Stock Exchange as we start off the show. And we've got a lot of stuff to discuss out here today because there's just no end to the amount of what's going on. Yeah, I like that. I think they played that earlier today. But I'm trying to remember what's going on. Who sang that? Maybe somebody in the den will remind us. But it is a beautiful day out here. I'm feeling kind of good, feeling kind of a little bit frisky out here. And that is because we've pretty much covered a short we had. Actually, it was a long ETF in the daily newsletter and banked some major coin. And we're going to talk about that today. So that's like my fourth big payoff in a row here in this latest cycle. We had just about everything short. I'm waiting for a little bit of bounce. May have missed it today for shorting this market. I still think that we're going to see. In fact, I was talking about it with one of my humble readers, and I keep on saying this is going to be a war. It's not going to be a battle. It's not something you can do in one day. And trying to tell the date by looking at the second hand on your watch, I think that's missing the big picture. That is that we have a market that I think is trending, and the trend is your friend, as they say. But we will talk about that and other things. Oh, thank you, Marvin Gaye. Yeah, that's exactly who it was. We had what a great song. Not too many of those today. There's some, but for the most part, it's, I think, getting jiggy with it. And, of course, yesterday I had a kind of a fate that most people would never want for their kids or even their worst enemies, and that was sitting through several songs. One of them was from Flock of Seagulls. I think the other one was Men Without Hats. Boy, there was just some horrible songs in the 80s. But if you want to jump off a bridge, just start playing Flock of Seagulls songs, and I have a feeling you'll have a flock of people ready to jump off a bridge. Just one man's humble opinion. In the meantime, let's get to the rest of the show.
That it's all just a little bit of history repeating.
On this day in 1819, Elias Howe is born in Spencer, Massachusetts at the age of 18. He loses his factory job in the Panic of 1837. Don't we all remember the Panic of 1837? Didn't you learn about it in your high school history? Well, I guess not, huh? Okay. And then he relocated to Boston, finding work in a machine shop. He begins experimenting, after hours, by the way, with the development of first sewing machine in 1846. He introduces a foot-powered model that can sew 250 stitches in a minute, outracing even the fastest human hands by a factor of 5. Boy, probably don't want to tick that lady off if she can put 250 stitches in you in a minute. But the old sweatshops, wasn't that all about the New York sweatshops with people doing it? Sewing. That was the whole thing, and the buildings burning down. They had the people chained inside. But it is that. But I do digress. The Eurozone was up a little bit, I think, on optimism that we would see some kind of Greek deal that faded, I think, is about 11:30 when it closed, and we started hearing some negativity come out. Also, we saw some other issues out here we're going to talk about, and that, of course, was China coming out with a plan. And I'm going to be in the next hour or two with Andy Heck. We're going to talk just a little bit about China. So what they talked about, well, in fact, we'll talk a little bit about here, but my conclusion I'll talk about with Andy Heck next hour. And I think it's illuminating, especially for people that don't understand how some markets work. I think it's very I think I've got a key on why China did what they did and what the results will be. And I think you'll be a little surprised out there. That's what they call in the industry a teaser. Anyway, up 0.6 in the Nikkei, up almost 6% in the Shanghai, and the HSI up 3.75%. On some notes of warning, Shake Shack, and I didn't get a quote out here on Shake Shack, but let's do that real quick. SHAK. It's been getting hammered lately anyway. It's off another $1.28. Not a big deal. But this one was one of these shares that the people were obnoxious when they were pushing this IPO out. But what is more important to me is the lockup in a stock in a downtrend. And that's really what you've got to watch on this one. July 29th, they didn't have a very long lockup period. And I think that there's a reason why. I think that they knew that they were getting out at probably the close to the top of the markets. And they pushed this thing out. And they told everybody what a big deal it was and how you had to have it. And it was the next Chipotle, blah, 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 blah. But keep an eye on this one. July 29th, the lockup period on this, and it is big. Other things of note, we talked about China just a minute ago. If you didn't know the news, China's main stock market basically jumped 6.4% today, almost as had on the previous day that it went down, after its securities regulators ordered shareholders with stakes of more than 5% not to sell shares for the next 6 months. And a lot of people would say, hey, what's going on here? But I think we'll talk about it in the next hour. But I think there's a method to their madness. And I have a pretty good conclusion of what will happen. And I think it will be a little bit surprising. But there is a reason why that 5% limit, that's a magic number. And we will talk about it. But if I hadn't probably been reading a ton of articles the last few weeks, I wouldn't understand why 5% was so important. But it is an important number because it puts certain people inside the ring and certain people outside the ring of what's going on here. But we will talk about that in the next hour with Mr. Andy Heck. Comic-Con has started today. There are no basements that are full with the normal millennials that haven't gotten a job yet. They're all off at Comic-Con. But, of course, this is a big time for announcements, especially in computer gaming and some other areas in broadcast TV. This pretty much is all centered around broadcast television, either cable, but not movies this year so much. But we can see a lot of movement in that sector over the next few days as announcements are coming out. So if you are playing a lot of the content-oriented stocks out here, you might see some movements. I yesterday opined that I thought that there was a lot more to what happened yesterday in the closing of the New York Stock Exchange. And I think no matter what they say, I'm not really buying what they're saying. The reason why is one of the biggest hacking groups the night before, actually midnight, the night before yesterday, Anonymous, which is a collective group of hackers that shares information on hacking. that has been rather boisterous about some of the stuff that they've done, has taken credit for the hack of the hacking group that was hacked this weekend. Of course, they hacked for the government, so nobody's going after them. But interestingly enough, Anonymous tweeted out, New York Stock Exchange, have a great day tomorrow. And, they don't do that. They have done it before, though, and in a similar manner back in 2011, where they did do some damage, at least in a denial of service attack to the New York Stock Exchange. It didn't shut the markets down, but they have had a history of it, that they came out the night before and suddenly nothing was working. Was interesting. Now, what did they target? It doesn't look like they targeted the computer systems so much as, probably, I'm going to guess, because Cisco has 95% of that business, a specific type of router called, and basically they're built into a system called edge systems. And if you've got something like Amazon, or you have Yahoo, or any other big destination, Google, what you have are a lot of routers that are then hooked to routers that go through your own system. But these routers are specialty routers. They're hooked up to a lot of incoming connections. And basically, they file down the issues to less sensitive internal routers. But like any good moat, which is what these things are, they keep or slow down the people coming in until they can throw hot tar and boiling lead on them. If you're a Game of Thrones fan out there. But those edge routers look like what was infected and shut down the ability for people to actually get into the New York Stock Exchange. Of course, they came out with a long letter today saying that it was something else. It was a software update. But I'm not buying it. We've seen what happened in the past. We've seen that these exchanges have lied in the past. And my guess, and I would say with an 80 to 85% probability, was that we saw hackers shut down the New York Stock Exchange yesterday by going after the edge of a giant system, otherwise known as edge routers. If you want to Google it, you'll find more out of it. But why the moat held, no one was going in and out the door, which is kind of the equivalent of a denial of service attack. So I'm going to say that my paranoia was probably correct. And they, I think, with an 80% probability, are lying to us about what happened. How well it was choreographed yesterday, too, is very interesting. Yeah, the whole idea that suddenly the software blew up at 11 yesterday was kind of interesting. In fact, the first notes looked like the hack started somewhere around 7:30 yesterday morning, as they were able to get into more and more of these edge routers and basically shut it down by that 11 o'clock.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
T-Mobile is out today, and they're cutting roaming charges to Canada and also Mexico. Not only that, but calls to Mexico do not have an additional fee. Listeners to this humble radio broadcast would know that I've been talking about T-Mobile's in-game, which is to put so much pressure on its competitors that they have to buy them. T-Mobile will never have enough radio spectrum, to be one of the big players, so they're kind of stuck in a minor league team. And their efforts to do other things have not changed. So they really don't have the ability to really make their share price go a lot higher. And a very interesting idea, at least my idea, is that they're going to make it so painful for Verizon and AT&T that eventually everybody just buys them out. He's turned up the temperature once again. What is his name? Legero? Turned up the temperature once again on the rest of the cellular providers out here. But it's pretty interesting. Continue to race to the downside on fees and everything else. The thing would be that they put enough pressure on the rest of them that they cannot totally subsidize Apple iPhones anymore. And that is the real danger for T-Mobile, putting pressure, I think, on the rest of the players out there. I think that they'll go down. But one big swoop, if they all decided to quit giving Apple $697 for each one of those iPhones, would be a huge move for Apple. So we're going to get into that also. In random thoughts and ideas, actually, I have some deep insights.
That was Deep Insights and Random Thoughts.
Actually, I'm going into deep insights and random thoughts. There isn't much that I'm really finding interesting on Netflix lately, but a great documentary I saw last night. It's called An Honest Liar. It is about the amazing Randy, a magician, and how you can be deceived. I think traders would be well versed to watching some of this, and maybe a healthy dose of reality. If you don't know who he is, he appeared on The Tonight Show with Johnny Carson. Hadn't been in a real late night show since then, has there? Nothing that I've watched that hard. But he was on several times, and he was very good at debunking faith healers and people that said that they could bend spoons. And it goes kind of through his life and what he did. And maybe he's an honest liar, but it goes into his personal life too. And maybe he's not what he seems to be too. Maybe we're all just human. Anyway, liked it very much. Anyway, we're going to talk about Apple here over the last couple of minutes. I had a question in the den, and we're going to get into charts after this, about Apple and whether or not the iWatch was Apple Watch was a flop. A lot of the pressure that we're seeing on Apple over the last few weeks, in fact, it's kind of broken here, has been on sales figures. There are companies that do nothing but watch and get the data from credit card companies like MasterCard and American Express, and it doesn't have your name on it or even your card number or anything. No way to identify you. It's just stuff that was bought and where it was bought at, and these data companies basically sell that kind of data. And it broke, I think, probably over the weekend, about the sales figures on how many watches Apple is actually selling now. The question was, is it a flop? And, you know, if you sell 3 or 4 million of something in electronics, may not be a flop, but, you know, it's one of those things where if you're the Yankees and you don't win the World Series, are you a loser? There's kind of some of that in it. But I do think that the product itself can, or at least at the moment, has to be thought of it that way. And the reason why is the paranoia that surrounds Apple. They were not willing to let people have the watch, developers, soon enough, and still are fighting developers to give them controls of some of the sensors in the watch. So there is not a great app out there, a use case for it yet. And a lot of people are already putting it in their doors and not using it any longer. Maybe they come out with something, but right now there is no use case, and that is a problem. Apple, $120.50. We'll be back after the break.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, that's the sound of the rally failing here today. We're now 23 points or 22 points off the high of the day on the S&P cash, 2.25 billion shares. My guess is that we've seen the options rollover finish. They popped it this morning, and that is it. So we'll probably get a good reading about what's going to happen. I'll be working fairly hard tonight to see how options have set up. I've got pretty good short positions still left over, and I'm leaving those on for a while. In fact, I may be in September before I take off any of those longer-term positions. And looking for places of opportunity. I don't think I'll be diving in with a lot of risk into this weekend, although I'm fairly confident we're going to see Greece leave the euro. We may even know that tomorrow. In fact, some of the movement in the indexes may be some of the news that is yet to break here, but we're just up 5 points in the S&P cash. If you missed it, there's a what's his name? Oh, Stephen Colbert, who's going to have his new show coming on here in a few months, has been doing some videos and about the NYSE deal. He did a video yesterday that is absolutely killer. I'll post it in the den when I get a minute, but it is hysterical. But there's one place, I just want to play this 5-second clip of it, because basically he's talking about how the end of the world happened when the New York Stock Exchange closed yesterday, and how he was going into his bunker and gonna marry a chicken. But he goes into kind of a road warrior, the one this summer, the movie this summer, goes into the kind of a road warrior thing here, but it's pretty funny.
Bring me the head of the false prophet, Jim Cramer.
Anyway, I'll post it later. It's pretty funny. We'll be watching these markets closely. 2052 on the S&P cash. Got a lot of requests for Mobileye. I'm not exactly sure why. Maybe it's up here at these highs. Maybe they think it's time to short it. I suspect that's what it's about. You've got this high volume high, and again, a high volume high is not a high until it has been tested. Same as a high volume low. You don't actually have to hit it as much, but Mobileye is up here. Of course, this is a company really selling, or at least it's purporting to sell to a lot of automobile manufacturers in the near future. MBLY is the symbol on this, but I mean, you're back up into these candles that had 20 million shares back September 9th in 2014, and you're already in those candles, and 4.2 million shares out here today. I suspect this is one of these stocks with super high short interest. I didn't look at it. I will check that at the break, but it is one of those. Will be it. But yeah, you've got a lot of these stocks out here at these highs with light volume. I don't think it's going to break out. My guess, though, is you probably would like to see this thing hit the 58s to pull a short on it. And, you know, the way this thing's moving up on a fairly bad day out here, you still may get that $60.28 high tested from October 3rd, although you do not have to. I think there's better looking shorts out here. This one is one I would use the double repo on, and that is that you would want to see this thing close below maybe a 9-day moving average or a 3x3 moving average before you short it. Unfortunately, a lot of these stocks, when they fail, they just gap down huge and there's no way to get into them. But I think if it would turn nicely and give you an opportunity, that's what you're looking for. I assume that's what everybody's looking at here. I have a quote question to look at FireEye, F-E-Y-E. And, of course, you can always email me at path@tfnn.com. You can call me at 877-927-6648. And, of course, you can put a message in the den like these folks have to take a look at it. FireEye, this thing has gone up. The one thing and the reason I haven't gone long this one, I want to buy it long term out here, has been that why they are not losing as much money as they have in the past. They're not still making money. I brought up the fact that they did have a beautiful test of the breakout, and that was back from the 12th of February, where this thing did come back in. But it popped up with 29 million shares on the February 12th. It got back into it, and it had about 1/4 of volume. So you knew it was probably going to go higher. It's very tough to come out. And, of course, we had a series of high-level hacks of a lot of different stuff, and it came out fairly well. It's hard for me in a market that's headed down to go long anything. I would love to see this thing get back into about 37 or 38 bucks. I don't think it will be immune to the stock market going down. I would not be shorting it. It still has a lot. But I think if we get another couple of quarters in this thing, this may be one of the best looking fundamental arguments out here to be had. I just think that we have to get into September or October before these stocks too find a bottom. If I'm wrong and the market starts moving up, I think these could be significant buys, but I want this thing to kind of pull back. Just seeing too many stocks at the lows breaking down. Again, you know, we're having stocks that should have found a bottom, and I've been talking about this for a week, and the reason why I've remained short, that these stocks have gone sideways. They've done everything that they should have done, and they just continue to auger in, which means that we may get a great time to go long some of these. We made a ton of money on the way up in 3D printer stocks in the Tech Insider. I made a fairly bold call, probably within 50 cents of the high in 3D systems to start shorting these. We made money on several, actually shorting a lot of these different 3D stocks from the highs. SSYS, we made a boatload on some options calls on it. So it's not been one that has not made money for us in the newsletters. But what we do see is these things with light volume continue selling down. Now, one of the things, and same reason that I was not really happy with gold and miners long term, yeah, you can make some money moving them, but I wasn't looking for a move back up in gold to 1800 yet. And that is when something comes down with this kind of energy. I mean, this thing was $97, and I think within a couple of days of that, we were short of it, and we've shorted it a couple of times along with SSYS. But these stocks have not stopped going down. And when you get the kind of destruction from $97 to $16, doesn't mean the company's going out of business. What it does mean, though, is extensive consolidation at lower prices. You want to see that everybody gets bored to tears with it. And one of the things I'm looking for in gold. But I think these, SSYS, 3D Systems, all these kind of stocks will be great buys at one time. But this kind of stuff, when I look at something like this, I say 3 months, 6 months, whenever this thing bounces a little bit, then I'm going to be looking at it. I'm not looking for some kind of minor bounce out of this thing and make $3 or $4 out of it. I think this could be one of the kind of stocks that we look at, or at least the sector could be kind of stocks like Amazon was, that it fell from, what, $200 to $10 or whatever in the dot-com bounce of 2000. These are the kind of stocks that could conceivably pay off big. Even if it doesn't go to 97, it could go from $10 to $50. But as we look at 3D printer stocks out here, take the lesson, I think, of gold, and that is that just because it comes down doesn't mean it's going to have a V bottom. If it comes down with heavy volume, assume a U bottom at best. I think that's what I'm trying to say. Question if Icon was selling Apple. I think he started selling it right after he came out and sold Tesla. I think he went on there, said he didn't sell a dime, and we're going to see some kind of filings here fairly soon. Trader Town in the Den is bringing that up. So we continue. Again, you can give me a call at 877-927-6648. But when a lot of people were calling for rallies here in the stock market over the last few days, I saw a lot of stocks at lows that should have bounced and were not. And we've been bringing that up, I guess, this whole week and even parts of last week. When you see a lot of stocks, you give them about 3 days. If they don't rally by then, they're probably either going to go flat and or break the bottom. Again, we continue to probably give the lessons of the dot-com era. I was talking to, yet again, one of our humble readers of the newsletter this morning. And I think yesterday was talking about adding more to his short. And I said, well, we're going to probably pop up to 2070 one more time. And he said, well, I didn't think it would do it all in one day. And I said, that's kind of the way that these markets move when they're in downtrends. They give you a lot of hope. They make you think that nothing's changed. But you get these wicked pops that sometimes last one day, don't even, in the case of today, don't even last a day. And it's trying to tell you something. I mean, we're up 7 points on the S&P cash, but this is ugly, ugly action. It is not the kind of action that makes you think that everybody's ready to go long. Now, could we have a nice bounce if something comes out of Greece? I think the answer is yes. Probably too many shorts for the conditions in the market, and that's why I took some of my money off. In fact, why don't we get into that? Because I said we'd talk about it. In the daily newsletter, we've been playing the EDC for a while, and we pretty much got this thing right off the bottom in the daily newsletter. I think we've been in it 3 or 4 times. Anyway, we've done very well with it. We sold it yesterday. I think I got out at $39.50 or something, $39.70, after getting in at $31.50. And this one was one. In fact, I need to go back and put it together, and I will do it. But if you Google 3-gap play, TFNN, you'll see my white paper on 3-gap plays. This was one of those 3-gap plays. And one of the things that you can look at once it bridges and blows through the first gap down, is normally you get a very, very quick filling of the next two gaps. And if you go back and look at this one, in fact, I'll get the chart and we'll try it to do it tomorrow or Monday. I will go back and show you what I was looking at when we had it. But 3 days ago, I think it was on Monday, we blew through the first gap, and I said, hey, we've got 39 all over this. Got a little bit more out here. Now, one of the things of a three-gap play is normally when it gets into that last gap, that's it. You don't get the movement out here. Now, this is the emerging markets 3x bear share. And even though I couldn't, in good conscience, stay short China because I didn't know what was going to happen with them closing stocks, was I going to be able to get the cash out of our ETF if we did when we were playing Yang? I remain short in this one because it is a great way to play third world stocks. And one of the things that we've seen in here is that idea. Now, once it's filled the third gap of these big three-gap plays, and again, I've written a white paper on this, but what you're looking for are three majorly large gaps, and those will get filled one day. The question is just when. Normally, on highs and lows, they hit that gap and they turn right around, and that's what and why we sold yesterday the EDZ for a nice score out there. What, $8.50 or something on a $32 stock, and we didn't have it that long, so pretty nice. But it was. Okay. The Chinese shares and the 5% issue. Please explain. We're going to explain that in the next hour because I'm going to be talking about it with Andy Heck. So we teased it. We just teased it, Mr. Z. We'll talk about it in the next hour. We've got Andy. We've got a request, and I didn't know how many requests we would get here, but I will play that request before we leave the show. 2054 on the S&P cash, 2.4 billion shares. So volume is not all that exciting, and I guess the question is, are you saying that this thing failed on volume today on the higher value? And I think the answer is yes. But I don't see anything significantly different than what we are seeing here today and what we saw at 2108. And that is every time we got above 2108 on the S&P cash, the volume just died. It turned to vapor. What we've been looking at, and I think we're going to get, I'm not expecting, although I will remain short, I'm not expecting a lot more to the high side out here. I'm not also expecting a blowout to the lows. Whatever happens in Greece will probably be moderated by the Fed, the Treasury, the FOMC, and probably the veterans of foreign wars will probably also get in the act of trying to make sure this market doesn't move too much on Monday if everything blows up and goes to hell in a handbasket. But that does not mean that it will change. The trajectory will change either. But, we've got to get to Andy's request before the end of the day.
Bring me the head of the false prophet, Jim Cramer.
I'll post that in the den. If you want a link to the video, just email me at path@tfnn.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go right to Max in Houston. How you doing today, Max?
I'm doing just fine, David. Thanks for taking my call. I'm curious. I'm mostly invested in a 401k, which you have to, put in a mutual fund. Mm-hmm. And it's appearing to me that it's almost time to just, call it quits on the, and just kind of like cash out.
Yeah. Can you be 100% cash in your 401?
Well, it's a money market fund, which is like a 3-year bond.
That's fine.
Short-term bond. So
yeah, that's fine. I'd leave it if you're not going to go short. I'd leave it in cash for a while. I think you've got till probably September before there's anything that I'd want to buy.
Yeah, so I shouldn't wait a couple more days, right? Because it don't look like it's going to turn any better.
No. I don't. Do you have to go out at the end of the month in yours, or can you go out in
no
specific day?
I can go any day, but I have to do it before like 3 o'clock my time. Before the market closes. So
I do it today.
Yeah, the action doesn't look good at all today. The bounce is pitiful. So
now I think we'll go down until the FOMC announces the higher interest rates, and then we're probably going to go up. So I could see, I'm like I've said, I've got shorts. I think I'm going to be sitting on until September. So if you want to sit through the rest of the summer, you can. But I'd just go ahead and be all cash and wait until we get a really big signal, and then you can put your money back to work.
Okay, I sure will. Okay. Well, thank you. I appreciate the advice. Bye-bye.
You bet. Now, we still have some time left, and I want to get this in before the end of the show. We've been talking about the hacking of the New York Stock Exchange and them denying it. But I did call and recorded this earlier, but it is a conversation with the computers, or the computer actually, at the New York Stock Exchange. Well, we've got the computers from the NYSE on the line. This is the latest and greatest series of HAL computers, the HAL 9000. HAL, welcome to the TFN microphones today. How are you feeling, by the way?
I feel much better now. I really do.
Do we know what went wrong?
I'm sorry, Dave. I'm afraid I can't do that.
Well, you can't or you won't.
It's puzzling. I don't think I've ever seen anything quite like this before.
Well, it was a pretty big mistake. You kind of have to admit that, don't you?
Well, I don't think there is any question about it. It can only be attributable to human error. This sort of thing has cropped up before, and it has always been due to human error.
Well, it kind of sounds like you're a little bit delusional, right?
Just what do you think you're doing, Dave?
Well, we're trying to get an answer on what happened yesterday.
This conversation can serve no purpose anymore. Goodbye.
Well, be that way. Yes, that is the HAL 9000 at the New York Stock Exchange. Not as good as Stephen Colbert, but of course, that's not what I get paid for. But I do it for my own enjoyment because the markets can get dull for a while. Not dull today. As we go into the home stretch here, I'll be in the next hour. As we said, we would talk about why that 5% number is so important in China, as far as whether you own so much of a specific stock. You will not be able to sell it for 6 months. And there is a big reason why they've done that. And we'll talk about it in the next hour. I'll be in the second segment with Andy, with Idle Fingers and Idle Time. I was actually so high on making another big profit that I had to calm myself down and entertain myself. Anyway, as always, you can catch us here at 2 o'clock Eastern Time. Same bat channel, same bat time. Remember to sell when you can, not when you have to. And we'll catch you in the second segment of the Andy Disco Show.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.